Today I want to look at the largest company in the world, Apple, and the largest semiconductor manufacturing company, TSMC. A quick look at stock prices show that today was a great day for tech investors compared to the crazy brutal week we had last week. For those unfamiliar, Apple is the largest customer for TSMC due to Apple's variety of products including iPhones, iPads, and Macs.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
About a week ago, I did a video on how there were reports that Apple was refusing a price hike from TSMC. As I mentioned in the video last week, I thought this was insane. I can't imagine me going to the food market or the gas station and said, no thank you, I'm gonna pay what I normally pay for these and don't really want to pay the price hike. But like I mentioned earlier, Apple is TSMC's most significant customer, which gives Apple some bite behind that bark. A company would tend to be nice to their biggest customers, no? This would be the case if TSMC had strong competition, but at the moment they are the leaders in leading-edge technology and are confident in their solution strength. A few hours ago, reports appear that Apple had accepted the price hike even after numerous refusals. And if you're enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to learn more about the semiconductor market, make sure to check out my newsletter, the link is down below. And this is not the first time TSMC has increased prices. In 2021, there were reports that TSMC did massive price hikes where some solutions went up over 20%. This year, prices are rising from low to high single digits depending on the solution or the overall node technology. The reason for price hikes are led by everything from COVID, supply chain issues, increased cost of goods, inflation, wage increase, wars, and increase in research and development. Taking a closer look at the charts, we see TSMC's gross margins have increased dramatically in the past 2 years. Profit margins have also increased, but at a slower pace, so some reason for the price hike makes sense. It does seem that TSMC is making more money now than they were before, and is this a bad sign for TSMC? As the slowdown in numerous markets like mobile, PC, and memory continue, can it be a reason for customers to fight back in this price hike, causing TSMC's margins to drop down dramatically? Like I mentioned, right, we can see here TSMC's gross profit margins, they are elevated compared to historical levels. I do want to say the risk of profit margins and gross margins decreasing for TSMC is definitely a red flag, but it's not a complete reason to sell. Because the question is not if margins will drop, I think most of the market believes it will. The question is if the market has priced in the margin dropping already, and how much. As we can see, TSMC's stock price has fallen over 50% from its all-time highs. Historically, looking at the past 10 years, its PE ratio has been in the mid-teens. Right now, for PE ratio is trading roughly at 11%, which is low compared to its historical average. So it does seem like the market is accounting for some margin decrease. So what are your thoughts on TSMC? Is this a buying opportunity for the stock, or is there too much risk as the potential of gross profit margins decreasing dramatically? You guys know me, I enjoy dollar cost average and obviously the semiconductor market. So if I wanted to increase my exposure in the semiconductor foundry business, TSMC would definitely be a player for that. So take care, have a good day, and see you next time.